The clock is ticking, and November may be the last calm before the storm in the stock market. The world is preparing for an AI-powered 2025. Tech giants are quietly making billion-dollar moves behind the scenes, and smart money is rotating into a very specific set of stocks, the kind that don't just survive market shifts, they explode because of them. Just imagine this. One investor ignored the noise, bought into a small data center disruptor early, and while everyone else panicked, they watched their investment multiply in silence. Another doubled their net worth simply by entering AI infrastructure before the world realized it was the new oil. Today, history is setting up that exact same stage, again, for those bold enough to act in November. Because while the headlines scream fear under the surface, companies are gearing up for massive growth catalysts, from AI data factories to semiconductor dominance to metaverse rebound to cloud-driven chip innovation. And if you've ever missed a life-changing stock window before, this might be your chance to not repeat that mistake. One of these four stocks is on the verge of a breakout that analysts believe could shock the market, and almost no retail investor is paying attention to it. But which one is it? One of these stocks is sitting on a catalyst so explosive, Wall Street is quietly accumulating shares before the news goes public. And by the end of this video, you'll know exactly which one. 1. Applied Digital Corporation, ticker symbol APLD. Our first stock is one you probably haven't heard much about, and that's exactly why it's interesting. Applied Digital Corporation, APLD, is a pure play on the infrastructure powering artificial intelligence. While everyone's focused on flashy AI apps and software, Applied Digital is building the back-end muscle that makes it all work. High-performance computing, HPC, data centers optimized specifically for AI workloads. What makes APLD unique is its ability to offer cost-effective and scalable data center solutions designed for GPU-heavy operations, the kind of power AI models like ChatGPT and autonomous systems rely on. Now, this stock isn't for the faint of heart. It's volatile, but that also means it's early. Applied Digital has already secured major deals with AI clients and is rapidly expanding its footprint to meet rising demand. If you're looking for asymmetric upside in the AI ecosystem, this is the kind of stock that could 5x or more in the next few years if execution stays on track. Meta Platforms, NASDAQ, Meta, the AI advertising empire. Meta is no longer just a social media company. It's an AI-fueled ecosystem controlling how billions of people communicate, discover, and spend. In Q2 2025, Meta reported $47.52 billion in revenue, up 22% year-over-year, and earnings per share of $7.14, crushing Wall Street expectations. Free cash flow soared to $8.55 billion, proving that Meta's massive AI investments are paying off in real dollars. Behind those numbers lies a quiet revolution. Meta's Llama 3 model now powers ad targeting across Facebook, Instagram, and Reels, leading to the highest engagement rates in the company's history. The company also operates one of the largest GPU clusters in the world, with more than 600,000 H100 chips driving AI research, ad optimization, and mixed reality applications. Even its long-criticized Reality Labs division has begun turning a corner. Analysts see Meta's EPS climbing 25% plus annually through 2026, and with a forward PE of only 21, Meta remains one of the most undervalued AI leaders on the market. It's not just a social network anymore, it's an AI-powered cash engine, quietly evolving into the operating system of the digital attention economy. Marvell Technology, MRVL, the AI infrastructure maverick ready to soar. Marvell Technology, ticker MRVL, is emerging as a cornerstone in the AI revolution, specializing in custom silicon and data center solutions that are in skyrocketing demand. In recent trading, the stock closed at $86.22. It trades at a forward PE of about 25.64 times, non-GAAP, and has a market capitalization in the ballpark of $73.8 billion. The stock's performance has been particularly striking lately. In September 2025, Marvell rallied 33.7%, fueled by strength in AI infrastructure demand, expanded insider stock purchases, and a refreshed $5 billion share buyback authorization. Several C-level executives purchased shares on the open market, moves that underscore internal confidence in the company's long-term outlook. Analysts are bullish, with a one-year target estimate of $87.74 and recent upgrades like Oppenheimer's outperform rating with a $115 price target underscoring the optimism. Diving deeper, Marvell's robust Q2 results highlighted a 58% year-over-year revenue growth in its data center segment, fueled by AI-driven custom chips that are becoming essential for hyperscalers like Google and Amazon. What sets Marvell apart is its focus on optical interconnects and Ethernet solutions, which are critical for handling the massive data loads of AI training models. Think of it as the unsung hero building the highways for tomorrow's digital economy. With AI infrastructure spending projected to hit trillions in the coming years, Marvell's innovation pipeline positions it for explosive upside. Overall, this stock screams by now for long-term investors chasing AI-fueled optimism, with urgency mounting as data center demand shows no signs of slowing. Don't sleep on this marvelous opportunity that could deliver outsized returns as the tech boom accelerates. Taiwan's semiconductor manufacturing company, ticker TSM, last but far from least is TSMC, the world's largest and most advanced chip foundry. TSMC isn't just another semiconductor company, it's the beating heart of global tech manufacturing. Every major chip designer, from Nvidia and AMD to Apple and Intel, relies on TSMC's cutting-edge fabrication processes to bring their silicon designs to life. In Q2 2025, TSMC once again proved why it's in a class of its own. Revenues surged 44.4% year-over-year, operating margins jumped to 49%, and earnings per share soared nearly 67%. Much of this growth was driven by demand for the company's 3-nanometer chips, which are powering the next generation of AI processors, mobile chips, and high-performance computing solutions. What's especially notable is that high-performance computing, HPC, now leads TSMC's revenue mix. This signals a structural shift toward AI data centers and large-scale inference platforms as core growth drivers. And TSMC's transition from 5 nanometers to 3 nanometers is ahead of schedule, further cementing its technological lead. Yet, despite this stellar performance, the stock failed to rally post-earnings. The reason? Forward guidance indicated a moderation in growth and slight margin compression in Q3. But this is more of a tactical pause than a strategic problem. CFO Wendell Huang reiterated that demand for leading-edge nodes remains strong, and analysts agree this is a short-term reset, not a long-term red flag. In a world increasingly worried about tariffs, inflation, and political instability, TSMC offers something few companies can: mission-critical manufacturing at unmatched scale. Its relevance to AI, 5G, autonomous vehicles, and edge computing is only growing. And this post-earnings dip may be a gift-wrapped entry point for investors looking to own one of the most strategically vital companies of the 21st century. If you want to build real wealth in this AI decade, you can't wait for the headlines. By the time the news reaches the public, the smartest investors have already taken their positions. November could be the month that separates those who watch the opportunity happen from those who profit from it. If today's breakdown helped you identify your next winning move, hit that like button, subscribe, and share this video with someone who needs to hear it before the window closes. Remember, wealth isn't built by timing the market, it's built by taking action when others hesitate. Make sure you're on the right side of history.